GTii continuing its bullish path, but I actually do have a warning, but it's not that much of a bearish warning. It's actually just more of a just in case, watch out for this. Okay, so let's go ahead and begin and find out exactly what I mean in this video. What is up, you guys? This is ARCa coming at you with a GTii technicals, raw price action, and statistical thread of analysis on this fine Friday night. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. With that said, let's go ahead and dive right into the charts. So yeah, let's go ahead and start with the immediate short-term time frame analysis, and we're going to actually look at the hourly chart for GTii, particularly with the Crypstex ARC-Series indicators. So in this first indicator that we're going to be loading is the DBSI indicator, which is actually a statistical indicator that takes a cumulative score of every single candle print, and this actually gives us an average mean right up here based on a percentage value. So you're seeing a 55% bull score versus a bear score of 45%. So in the hourly chart, we're still looking at the bulls in control. So if we look at the bi-hourly chart, you can actually see, let's go, if it ever decides to print, you can actually see that we're still in control. 58% bulls, 42% bears. We can actually go down every single time frame, and this gives us that averaged percentage based on the strength of bulls versus bears. Okay, so I did want to touch on a couple things here. First of all, on today's candle, today Friday, okay, so we did get a sell signal from DBSI. The enhanced MACD, which is actually the ARC enhanced MACD, also part of the ARC series indicators, which actually can, just as a side note, they can be available to you. Just send me a DM and I'll go ahead and go over the details as to how to acquire the packages for these indicators, which is about 8 indicators included in the package. Okay, so yeah, in this case, we are getting a signal, and this signal is actually represented by this little red circle. So that little red circle usually means that there is incoming downside pressure. Now, please understand that we're in the immediate short-term time frame here. This is the hourly chart, so there's still this can likely play out over a half a session, not even a whole day or anything like that. But do know that some of these iterations can be serious. For example, this one here, it actually dipped all the way down to here, and then we actually got that bull signal, and we have made an upside from this bull signal right back here, which was launched on December 14th. Just about midday. So now we're actually printing a bearish signal. Enhanced MACD hasn't caught it just yet. Let's see if Armor has caught it. So this is also another, it hasn't caught it actually. It's still honoring a long signal. So Armor is actually another indicator based on the 8 indicators that would be released. So this is an indicator that's comprised of several exponential moving averages, all placed in close proximity. This gives us a wave of motion, and in that wave of motion, we actually do get some long and sell signals, or buy and sell if you want to take it as that, because it pretty much is. So yeah, we have a short signal here, goes down, long signal here, goes up, short all the way down here. The point of it is actually from this short signal, we did get the long, right? So as you can see here, the green bars are starting to print. Okay, so I'm talking about the exponential moving averages are starting to curve into making this this type of wave happen, right? So we do have some mixed sentiment here between the indicators. So when this happens, we actually have to validate it with a few other sources or a few other metrics, right? So let's go ahead and move on to the next chart and see what we have. So this is part of my warning. Okay, so now that DBSI is along. It's actually in accordance as to what I'm saying for a temporary downside thesis. When we start seeing these long wicks to the upside, okay, and particularly to this type of candle when printed at an uptrend, this usually presents a downside continuation. I've told you guys several times that, printing an evening star or a shooting star doji usually presents a downside continuation. But in this, I mean, please know too that this is the 8-hour chart, and we do have to express some respect for the candle prints here. You know what? Actually, looking at these candles is very interesting, as every candle is being used as its own support and resistance. Very, very interesting. This is like almost algorithmic, actually. So now, yeah, let's go ahead and now move on to the next chart, as I wanted to express this warning first, okay? And actually another thing, another little quick sign is that you can see a series of higher lows happening here, and this candle here actually made a break of market structure, making a lower low from this low here, okay? So this usually presents a potential pullback as well. So let's go ahead and move on to the next chart. Actually, this chart may not be so pertinent right now, but we'll go ahead and come back to it maybe another day. Okay, so this is the statistical side of the analysis. Everybody knows that everybody's already talking about me guessing a potential or calling out a potential 3,000% move to the upside. Yes, yada, 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 cool. All right, that's not the point of this. The point of this is because we still have to touch on the volatility versus momentum profile. So new viewers, new listeners, this is volatility you're looking at, represented by this indicator BVWP. Okay, so in order for us to gauge a bias for direction, we pair this with stochastic momentum, which is proprietary to TradingView software. And oh yeah, by the way, the link for TradingView software, my affiliate link, is actually down below in the description if you want to consider checking out charts or charting the way I do. Okay, it actually does help me out when you do sign up to that, but that's beside the point. Enough shilling. So let's go ahead and move on now to the actual point of this statistical analysis. So let's make two windows here, so where we can broaden the volatility. There we go. And we can broaden momentum. Okay, so yes, a little statistical here. I'm sorry, a little bit of physics in this, but it's okay. This is very important for us to consider. So this was these are the prerequisites in order for us to make that 3,000% move to the upside, right? So we're just going to go ahead and touch on it again because there could be people who are not watching the videos all the way. So we do need both of the moving averages from, which is actually K% and D%. These are what these are signaled or called in stochastic momentum. Okay, so the momentum oscillator averages do have to finish their pivot and actually make their upside continuation. So we are looking at both of these in the 3-day chart. So it is a macro perspective, and this is likely to take days for it to correct and to pivot towards the upside. Okay, now particular to volatility, we do need the volatility component, which is this spectrum line of the BBWP. We do need it to also it's in the critical percentage zone. So the percentiles, which I consider to be anything within the 90 percentile or anything above this 90% trend line drawn red. Okay, so we need both of the volatility component and the moving average both pivoted to the upside. There's a few variances to this. Okay, so we need it within the critical volatility zone. We needed either pivoted towards the downside, or in other words, or AKA contraction phase, and or maintaining itself at critical volatility, printing these bars here. So these bars are actually a 3-day read, since we are in the 3-day chart. Okay, so every single time a candle closes of the 3-day period, a bar is printed in critical volatility, since it's all the way up here. Okay, so in this case, yes, we do need, the prerequisite is that we need both the volatility component and the average above this, and alongside the stochastic momentum averages pivoted towards the upside, creating this this oscillating, if you can see this little egg here that we're drawing, we do need that oscillation to essentially happen in order for us to make the average the upside thrust. So now please remember that it's a statistical value. It is not a certain fact. Okay, so I did say this yesterday, but upon that criteria being met, where we're printing those red bars, you can actually see that in this iteration, which was dated back in 2015, April 30th, you can see that we met the criteria. We're way up there printing all the 3-day bars. We're down here way in the oversold percentile of, please excuse me, let me go ahead and just mute that. That's very unprofessional. I apologize. Okay, so stop it. All right, so yes, we were all the way down in the oversold percentile. Stochastic momentum is very similar to an RSI, which is why we can use that jargon. Okay, we can use that oversold type thing. So it started that contraction. I'm sorry, it started that expansion phase, and it started the contraction phase with volatility. So that opposition started happening just like we're talking about in the iteration right now. But upon that iteration, you can actually see that it just moved up 39.77% to the upside over the span of 75 days. Okay, so just know that the variances are very much real. There's a lot of variable within this. So now, and the first iteration was incorrect. That was, look at stochastic momentum straight giving us an upside suggestion, and we are not going up. It actually came down. So that was an incorrect iteration, hence the 90% accuracy from the momentum oscillator itself, since I have ran a backtest of just momentum in this particular ticker, in this particular time frame, throughout the entire trading history of it. Okay, so momentum upside accuracy, it is at 90, just about 91%. So that's why we have an incorrect iterations versus correct iterations, so that we can create this averaged mean here. Okay, so I was actually thinking about creating the lower side of a standard deviation and the higher side. So I will get back to you on that, and we'll apply that metric as well, so that we can see other potential values as well, as far as the lowest value and the highest value, to where 6.8% of the results can land in, right? So we'll go over that later for statistics. Okay, so yeah, now that you know that the criteria has to be met, and there's literally a crap load of variances, please just, don't blow me up with the 3,000% move to the upside. It does still need a little bit more of time in order for us to apply the metrics. And the metric is based off of an average 32.25 day long period. Okay, so just like this little 39% move to the upside took 75 days, we're being suggested 32.25 days upon the criteria being met. Okay, so let's go on and move on. Let's go on to the last part of the chart. And I'm sorry, somebody asked me in the comments below if I consider one-on-ones and stuff. Sure, we can. I think Angel Eyes. Yes, I do consider that. Please send me an email. To whoever is interested, please send me an email. It's actually located in the about section of my profile. So it's you'll see it there. It's the Gmail address. Okay, and I just don't want to say it out loud. So in case people don't want, you know what I mean. Just it's there. Please shoot me an email and we'll talk. Okay, so yeah. So now we're gonna look at the variance chart. Okay, so, or the divergence chart. Pardon me. So this divergences happened actually when there's an opposition of price action versus momentum. And in this case, momentum represented by RSI, relative strength index. Okay, so I actually did catch one more drive of hidden bearish divergence. And in this case, actually, I'm sorry, bullish divergence. So, and I'm sorry, and it's not hidden, it's actually regular. So I caught one more drive of regular bullish divergence from the two that I actually caught yesterday, of which are already at play. So we're looking at 1, 2, and 3 drives. Now, from those 3 drives, actually just one is a phantom drive of regular bullish divergence. Phantom just means that we're going through price action to get from point A to point B, hence all this price action here and all this price action there. Okay, so for the new viewers, new listeners, you are looking at RSI here. The pink line is representing a 14-day period, a 14-day moving average, okay? And the purple line is representing RSI signal. So this actually helps us determine momentum and determine direction for the asset. It's delayed, so we do need to get thrust first before this starts to manipulate, or it starts to get influenced, better said. Okay, so now let's go ahead and open up the divergence, I'm sorry, the RSI properties, okay, per my RSI setup down here. So for the new viewers, please focus in on these 4 zones, as I will be using a lot of that jargon so that you can understand what in the world I am talking about when I say bear strength percentile, okay? So, all right, so let's open up a multi-pane and gauge that edge for the coming sessions. And we'll start first with the immediate short-term time frame, which is the 30-minute. And the 30-minute is suggesting a continuation to the upside, aggressively might I add, and it's definitely within the grips of the bull weakness percentile and has now moved above the moving average, which is very bullish. Okay, now please understand that this is the immediate short-term time frame, so this does not mediate or it doesn't influence too much into the larger time frames like the daily or the bi-daily or the 3-day. Okay, so this is likely to play out a little sooner than later. So let's look at the bi-hourly chart. So the bi-hourly chart, you can see it still has an upside continuation. It has moved outside of the deep areas from the bear weakness percentile, now suggesting a continuation to the upside. Please note that the pivot is not as strong as this pivot here or even this one. So that can likely mean that there could be a pullback soon, so and in this case we do have the moving average below us, which means that the moving average can actually make its way up, and RSI signal can actually come back down, test that moving average, and continue on to the upside. Okay, so another thing that we have to do note here is the 6-hour RSI. So I'm sorry, I'm pausing. I'm actually looking at something very curious. Okay, so the 6-hour RSI is suggesting a downside. However, the downside looks to be temporary, and it's very much expected since we are in the deep areas of the bull strength percentile. Usually when we're in these weakness areas or the shallow areas, we can actually encourage sideways trading, or the gravitational pull into the opposing zone is likely. Okay, so we can actually just get pulled right into here, which hopefully by the time that we do get that little pullback, the moving average would have then moved a little higher, so we can use it as a form of support before a continuation onto the upside. So there's still no validation for a continuation to the downside aggressively other than just a pullback, and a temporary one at that. Okay, so now the daily time frame is one that I want to give some weight to, as it is approaching the very shallow areas of the oversold percentile right in this area here. Okay, so as it's approaching to this shallow area, it's very appropriate since the moving average is now barely crossed. So this is looking bullish. Okay, and the daily is suggesting a continuation to the upside. Let's look at the bi-daily. Bi-daily is also suggesting a continuation to the upside, but please remember, as long as we maintain ourselves within the shallow area of the oversold percentile and the deep area of the bear strength percentile, sideways trading is likely to happen, and or the rejection of either or zones. Okay, but we can follow up with that as the days go. 3-day is a slight pivot to the upside, but it is being manipulated and it is being changed. Not manipulated, you can say influenced. Okay, so yeah, things are still looking pretty good for GTii. I do expect an immediate short-term pullback followed by a recovery, potentially in the next trading session, which could be Monday. So if you have any questions or concerns, please don't hesitate to reach out to me. I'll make sure to leave the links in the description below for you to consider joining the ARCa trading community in Discord, okay? And also, please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, okay? Just entertainment. So make sure to do your own DD and we'll be okay, you guys. I definitely care about the decisions you're making. I care about, us that have families and stuff. We need to make sure to take care of those people first, okay? So let's not let our emotions get in the way, and let's not let FOMO get in the way above all. Okay, so this is why I suggest for everybody to join the ARCa trading community as we try to mediate those types of situations for FOMO. I can't tell you how many comments I've gotten to where ARCa, you've saved me from so many FOMO plays, and I've literally saved so much money because you decided to switch to Geico insurance. I'm just kidding, you guys. So it's just I'm being a little fluffy here. So just know that I'm not like any other YouTube influencer. First of all, I never actually wanted to be one in the first place. I actually just wanted to exchange analyses with like-minded analysts and other mathematicians, but I literally haven't gotten to do that yet. So the validators of my thesis have been you fine people, and I appreciate every single one of you for tuning in and for listening to me rant and complain and also predict with my cool crystal ball that I have in front of me. I can't guess these things, guys. I only say what the chart says, okay? So, and then we move appropriately, and we prepare, okay? We prepare for the worst and prepare for the best. All right, you guys, but with that said, I wish you well, a very good night and a great weekend, and I will catch you at the bell on Monday. Adios.